to the AJ Brown Show, where we talk about all things investing, options. AJ, who's to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. Not sure what happened there with our intro. Seemed a little choppy.
Oh, I noticed that too. I thought it was just me.
No, definitely something on the lag there. So apologies for that. Anyways, today is March 8th, our first episode in March, episode 123. The big headline on the wire today is unemployment. AJ, did you get a chance to run through those numbers? Did anything stick out for you?
No. I did, and no, they didn't. Here, let's take a look. U.S. unemployment. So, yeah, sure. We got higher job numbers than we expected, but then you look back at last month. I'm going to bring my marker up here. You look at last month, and last month was revised down. So, the mainstream media is touting this as great news, and then touting the unemployment rate number as bad news. But in my mind, what investors are taking away is that employment is doing okay. It's not doing stellar, which would actually raise alarm bells, because the Fed just spent 2 days on Wednesday and Thursday with their congressional testimony, basically saying that, not giving any more of their rhetoric around perhaps needing to raise interest rates. In fact, there was one sentence that a lot of analysts focused on that Jerome Powell said to the Congress about possibly getting ready to lower interest rates this year. And so everybody got excited. And so this employment report actually there's nothing in this employment report that either gets me excited thinking that the Fed is going to have to raise rates because things are still too hot. And also it's not negative. So in effect, this is a situation where, tepid news is good news.
And that's exactly what I was going to follow up with. We kind of want employment to take a dip or to feel a little heat so that the Fed can start to lower rates. Like we all as investors kind of we're waiting for that, right?
Yeah, the scoop is nobody wants unemployment to get worse. But if we're going to go in for that soft landing, we'd like for it to just, kind of stay where it is, go sideways for a little bit, and not go down, but not go up, not go crazy. Because take a look at what investors, as soon as the Fed started, let me back us up to Monday and also Tuesday. Monday and Tuesday, investors were getting jittery. I mean, investors are jittery across the board to begin with, right? And the reason why investors are jittery is because things are too good to be true, right? And so investors are ready at a moment's notice to jump on the bear bandwagon, because it's just too Goldilocks right now, too good to be true. With that said, on Monday and Tuesday, with no news and a lot of expectations of bad news, investors did what they've been doing in previous weeks. They started to sell off, as you can see here in these two bars. And then sure enough, the Fed came back on Wednesday and Thursday with their congressional testimony, quite bullish. And then today, I mean, the bulls continued into the morning session. The bears are kind of like, tamping down excitement going into the weekend, but still it's a positive day so far. It really does look like we're coming in for a soft landing, but me included, investors are ready for some sort of surprise. So everybody's on edge looking for surprise, but at the same time, the news just keeps coming in good, Sip.
And when is that next rate decision? How far out are we?
March. So if I take a look here, it's in about 2 or 3 weeks. March 20th is when that's going to come out. Expectations by investors, if you can see here, is pretty much that the Fed is going to hold solid. Then the next one after that is May 1st. And again, almost 3/4 of investors are saying that the Fed is going to do nothing. In other words, everybody's kind of adopted this stance that the Fed has been talking about that says, hey, we need to just let this stand for a bit and make sure that it is working. We're not going to make any rash decisions on dropping interest rates until we just make sure that it continues to work. So investors have pretty much priced in that on the 20th of March and then again on the 1st of May that the Fed's going to do nothing. But then investors have in the middle of June, end of July, and middle of September that rates pretty much are going to be dropping. Investors believe that this year, 2024, that the Fed will drop rates, about 3/4 of a point. They used to think it was going to be a whole point. Now they're thinking 3/4 of a point. And they're almost solidly behind the idea that June 12th will be the first rate drop, and then maybe one in July, and then it looks like there'll be one more at the end of the year. Maybe they'll skip September. Maybe they'll do it September and then hold through the holiday season. That's a little bit far out. One extra piece of news, Sip, is that Christine Lagarde over the European Central Bank, which is, the next biggest bank out there, she also is talking to European investors about lowering European interest rates. So, we usually do things as central banks in tandem. And so that's just further kind of confidence that something like that's happening.
And I guess it's kind of the thought that if we were to get some negative news sooner than later, then that could maybe change that timeline up a little bit, right?
Maybe.
But inflation has been pretty consistent. So unless there's a big change there, it seems as if the news continues to come out flat week over week over week, and this market just naturally is just ticking up. I mean, what are we at? 5,100, close to that?
Yeah, close to 5,200. If you take a look at where we're trading right now, this morning when I was writing up the notes to the show, we were at about 5180, 51. Let's see what today's high was so far. Today's high came in at 5190, 5189 and 26 cents. It's back down a little bit. We're moderating down to 5167, but we're pushing on that 5,200 door. I still have my support and resistance converging around March 15th. So that's next week when options expire. So maybe there might be, again, I'm always looking for some sort of catalyst, some sort of piece of tidbit, whether it be in mainstream media news or some sort of economic news, or maybe a central bank, or even one of these smaller banks, something happening that could, justify it. Almost, Sip, these patterns that we see in the market almost become self-fulfilling prophecies, because investors like me, I'm not the only one seeing this, right? Everybody I talk to sees this converging. And so it's almost like we're looking so hard for something that could cause us to sell off that we may actually subconsciously or even consciously fabricate something that creates this moment and we all start selling off. So it's an interesting phenomena.
Yeah, this continuing to go up, new market highs week over week over week without, I mean, it's crazy that when you looked at this week's dip, it was very similar to last week's, where it was like Monday, Tuesday, everyone comes in from the weekend, we pull back a little bit. There's something in the news, something around interest rates. And then heading into Friday, I mean, the employment number today is moving the market a little bit this morning, but heading into the afternoon, I wouldn't be surprised if we hit new all-time highs, right? Like if we look at the charts, very possible.
Yeah.
All right. So let's see. What else do we have on the docket? Oil.
I mean,
commodities.
we're seeing Oil seems to be moderating this week. Bonds, we're seeing a little bit of a upsurgence on Monday and Tuesday, and then a little bit of sell-off. We still have, and again, this is why a lot of investors like me, we just have history knowing that, these yield inversions, and I keep bringing this up. Like if you look at the 3-month bond, it's paying almost 5.4% right now, whereas the 10-year bond is only paying 4.1. That doesn't bode well for long-term investment into things like treasuries. It means that people are rather investing in short-term. If you think about it, if things were working, as expected, you would want to incentivize people to invest longer term. And that's not the case right now. And so that's kind of a weird thing happening. But at the same time, the Federal Reserve is quantitative tightening. They're doing a great job. It really could be a soft landing. The Fed does not have a good history of doing soft landings. The last soft landing they did was it was 30 years ago. So that's why a lot of people are skeptical that they're going to pull this off. But man, looking day to day, I'm actually quite confident. And you won't hear that from me often. I'm usually more on the pessimistic side. I'm actually feeling good about this. I'm feeling good about the medium to long term of the United States and their economy.
And I saw that you pulled up the VIX. Is that telling us that things are a little bit more chilled out?
Yeah, well, I also believe in mean reversion. And sure enough, the VIX was at an all-time low at the beginning of this 2024, and it's slowly creeping higher. And, I urged my participants in my programs to think about that VIX hedge that we've talked about, Sip, where you kind of create you buy or you set up a credit spread, which gives you credit, right? And then you use that credit in order to set up a debit spread up here. And so long as the VIX stays in a certain range in the short duration, this trade, covers your commissions and maybe gives you a few pennies. It's no big deal. But what happens is if for some reason, like we saw about a month ago, the VIX shoots up, this particular trade also shoots up. And when the VIX shoots up for a couple days like this, it usually means it puts the rest of our portfolio in peril. So, taking a quarter to a third of your portfolio and putting it in this kind of VIX trade that we keep talking about is a fantastic way to hedge the portfolio. And if nothing happens, you make maybe a percentage point or two on the VIX kind of staying within a range over a 2-week period. And the best time to do that is every time you see one of these dips in the VIX. Just put on one of these 2-week trades that should something happen that surprises everybody, and a lot of your trades maybe, reverse and you don't have your risk stops, whatever reason that your portfolio might be in peril, this other position will then, equalize things out and keep you from getting in trouble. So I definitely urge some folks, if you know what I'm talking about, you can go back and watch on YouTube some of our previous shows where we've described this trade in detail. You may want to hedge with this VIX. This came from I got to give credit where credit's due. One of my favorite coaches does this trade religiously, and he shared this trade with me like years ago, and we've all, taken it as kind of the trading trainer way to go.
Awesome. Do you want to pull up the S&P real quick?
Sure.
I just want to add a note here because I see it in our daily notes. Go ahead and pull it up on the screen. But as we continue to hit these new highs and see some of this consolidation, just want to remind everyone that this is a fantastic market for trading options, especially if you're a little hesitant to get into the top. There are tools that will make you feel a little bit more at ease about putting those trades on. And that's the special sauce here at Trading Trainer is options trading. And so if that's something that you're new to or something that you haven't really dived into, AJ and the team have an awesome daily workshop, completely free, that you can jump into and learn a little bit more. We went ahead and threw the link to that in the chat, so that is there for you. Otherwise, we are streaming live. AJ's got a little bandwidth today to run through some tickers if anybody has a specific name that you want him to look at. Otherwise, we've got his pick of the week. We've got our speed round, and we've got an interesting little topic of the day to run through. So sit tight. We're going to take a little bit of a break, and we'll be back in a few seconds.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Once again, the link to that webinar is in the chat. And speaking of that little commercial, driving the fancy Tesla at the time, I feel like since we shot that, there's a lot of new names popping up. And I know you and I have talked about Fisker in the past. And just this week, there was like this very well-known YouTuber, Marquise Brown, something like that, who did a negative review of the Rivian or of the Fisker, and it got slammed. And that was just more of like a user experience, right? Not really going into the technicals or not. But on the reverse of that, I'm gonna go ahead and pull my screen up. AJ, are you still optimistic about Fisker? Because I know you were thinking about getting one, but I mean, with the news coming out, it's not as hot as when we first talked about it.
No, I have gotten my deposit back. When Fisker started to produce cars, I think it was Motor Trend or one of these rags that's popular. They also panned it. Now, a lot of people were questioning the author who did that, but now we're starting to see actual users, especially these YouTube influencers who are, really going through in their videos showing why they feel like the Fisker isn't up to par. And so all of that builds for me. I have to admit that, like, for instance, when it comes to like Amazon reviews or text reviews, I'm kind of skeptical because I feel like, number one, people write in when they're unhappy versus when they're happy. So you're always, when you're reviewing text reviews, you're always finding somebody who had a bad experience, but it's rare compared to the good experiences. But when you get one of these folks who makes a video and actually shows you tangibly why something isn't working for them or working in general, I give that a lot more credibility. And yeah, the Fisker just keeps missing people's targets. I have had friends, because the Fisker's really been launching a lot in the big cities. So I have had friends in LA who have like taken pictures of Fiskers they've seen on the road for me because they knew that I had kind of an interest in it. It looks good, but then, I'm not as bullish about Fisker. But I think we're going to talk about another company that my wife is really excited about with their electric car. Is that right?
That's right. And I don't know if she's seen what was revealed yesterday, but I think from us as investors, right, I think we're always looking for the next Tesla, right? Because Tesla's rise is phenomenal, right? Not only in their stock and Elon Musk and just the concept. And so we're always on the lookout for the next one. And there's a few names that have been competing. And I think as of yesterday, Rivian may have taken a big step forward. So the big news is they've got this this R2. Look at this bad boy.
Is that like it looks like the Land Rover.
It's a little, yeah. And they keep comparing it to like a VW. They also enhanced their SUV, the R2, the R3.
See, that's what my wife wants really bad.
And it's looking slick. And so they had this this unveiling event yesterday. I'm going to see if I can find a picture of oh yeah, this one right here, the
Ooh.
RX3. Look at this bad boy. Or that's not a good photo. But the event looked phenomenal in terms of the reveal, and the price point of these cars, I think, is down to 45,000, which is very reasonable for I mean, for an electric car. And the CEO was touting that, in the future all cars are going to be electric, and it's believable. But after seeing some of these prototypes, I'm starting to become more of a fan of Rivian now, especially
Yeah.
that it's priced. So with that being said, can we pull up the stock Rivian? Can we see
Sure.
what the potential, what the market reaction is? Because the social buzz is there. People are loving what they're seeing. The question is there still money to be made?
Well, so let's take a look here. So Rivian, as you remember, they had their earnings call, and it didn't give investors confidence. So that was back on February 20th, about two and a half weeks ago. And they said that they were having a hard time making profits. But the key here is Tesla spent years not making profits, and I think that it's who can still create a good product, right? Um, who can get from the early adopters to the mainstream, right? And who can just stick it out. And I think that the Rivian folks can stick it out. And you can see yesterday, investors got kind of excited, right? Because it's not just all about numbers, there's also a certain amount of hype that goes into these stock prices. And so, yeah, I got a signal yesterday evening. We'll see if we get our follow through bar today. But yeah, I think that you know what I would say, Sip? I would say I would use a strategy. If you are a believer in Rivian, like we are on this show, you might want to add some Rivian to your long term portfolio. And one of the best ways to do that would be with a cash secured put. So a lot of people are familiar with buy orders. Obviously, you send your broker a buy order, and more accurately, we call them limit buy orders. You basically say to your broker, "Hey, I'm willing to buy Rivian at $10 a share. So I'll put a buy order at $10. If it dips down to 10, great." Right now, it's trading at 12.68. But what you could also do, if you're willing to pay $10, let's look at March 15th. And you see you've got all these different strike prices. If you're willing to pay $10, you can go ahead and sell this put. This put will, I mean, it's not much, but it's 3.5 cents. That'll pay your commission, right? So basically, you put in this order, but instead of just calling up your broker and saying, put in an order and paying all the commissions and all this, you get paid whatever the premium is right now to put that order in. That means you could take that money, and if the order doesn't fill between now and March 15th, you get to keep that extra change, right? And if it does fill, you can apply that money towards the price and basically lower your break-even price. If you're willing to pay $10.50, you'll get a little bit more. If you're willing to pay $11 right now, I mean, you'll walk away with 11 cents a share. So you actually would reduce your price from $11 down to $10.89. That's significant, right? That's like a 1% drop in the price. You get a 1% discount for doing it this way. So this might be a solution for some of those folks who would like to add Rivian to their portfolio. They don't need to do it right away. Don't ever do a limit buy order again. Instead, sell cash secured puts.
And I just want to follow through with some statistics on the hype from yesterday's event. And this is the Rivian CEO, RJ Scaringe. I mean, whoever this guy is, he's definitely going to be important soon. But from that event, they've taken 68,000 reservations of that R2, which is a huge number, right? I mean, that is on your way to becoming profitable, to hitting some of those benchmarks. So I'm kind of liking how this is all.
How much is a reservation?
You know what? I don't know the question of that, but how much was the Fisker reservation?
300
Okay,
bucks.
so not a huge number, but
Well, 300 bucks times 68,000. I mean, he just made his company a couple $1,000,000. That would float the company through some hard times for a minute. And if he's really truthful about his new vehicles coming in at that price point gets people that federal incentive that's going to be in place for the next, what, till 2032. So that means people get, like, I can't remember. I think it's $7,000 off. So that adds, right? I love that. That's great. He's
yeah, and
smart.
I've seen these on the road. They're phenomenal looking. So
Yeah, my wife has too. I actually also just on the electric car front, I saw a Lucid for the first time on the highway here around Washington D.C. That thing's pretty
yeah,
sexy
that's funny.
too.
I actually play hockey with a guy that has a Lucid, and every time he pulls up, everyone's like, "What is this thing? What kind of car is it?" Right?
Mm,
Although I'm still
right?
more impressed with the Rivian, like definitely making the
Yeah,
right moves here. And they're a Southern California company. I think this was like in Laguna Beach they did this. So definitely
yeah.
exciting stuff. We'll keep an eye on Rivian. I mean, I'm liking it for the long-term portfolio, AJ, and do some of that covered call writing. I mean, uh, especially
Yes.
if it can have a run like Tesla had, right? Over, a couple years. So we'll
Yeah.
keep an eye on that. Rivian ticker symbol R. What is that? RNBN. RIV.
RIVN. RIVN.
All
Yeah.
right. So that's our trending topic. Some news that's buzzing in the world. Um, Moving on with the show. I think the viewers want to know what's good in your world. AJ, what's hopping on the screen? Where are you seeing opportunities? And this week, your pick of the week is a name that we've covered a handful of times, and that's Citigroup, ticker symbol
Mhm.
C. And what are we keeping an eye on here? Where's the opportunity?
I mean, Citigroup has had a run up, right? If we take a look back at a year-long chart, Citigroup was kind of finding a bottom and now it's sort of run up. In fact, I want to take a look at a 2-year chart and you can see we're at the top of our 2-year high. So I'm actually looking for opportunities to do some shorting on Citigroup. Civian. I got Rivian on the mind on Citigroup. You guys might notice, by the way, that I've got some extra uh, um, coloring on my chart. If you guys, I know some of you really look at my chart, and I just wanted to explain that we've been working on updating our free indicators. And one of my computer science guys who's working with me on that actually has played around with some candlestick Bollinger Band RSI agreements and created this other indicator on the side. And it's a validating indicator, not necessarily a primary signal indicator, but it's been pretty cool. And we actually introduced it to my program participants last night on our weekly workshop. Every Thursday, we have a weekly workshop with my program participants that are, busily out there looking for premium selling opportunities. And for some of those participants, they've signed up as beta testers. And so if you guys want to be a beta tester, you might as well think about joining our program, right? Because not only are we, conveying and getting people up to speed on how to sell premium, but we are a very active community that's helping each other out, not only to find trades, but find the best way to tell us when to trade. And so I wanted to put it out there. They're helping me optimize and find the best settings for this indicator. And so I'm putting it out there. You guys are missing out if you are watching this show. First of all, you're missing out if you are watching this show and you haven't hit like and follow on our channel. But you're also missing out if you haven't given our program a chance, because it's not just a program where we're teaching about premium selling. We're actually doing, and we're helping each other out, and we're leveraging ideas from each other, and we're testing these indicators. So this is a cool one. This is my standard fast MACD indicator, and I am waiting for my fast MACD to also kick in on this validating signal that we're getting today. But what I would be doing here is I'm preparing to do some shorting on Citigroup. And there's two ways I can do that. I can do it the traditional way, which is I short the stock. That means behind the scenes, I'm borrowing stock from my broker's stockpile of stock shares and then selling to open, hoping ultimately to buy back to close at a lower price and keeping the difference. Or the other way to do that is to buy put options. So if I have a cash account instead of a margin account, you can only short stock if you have a margin account. So if you have a cash account only, and that would be if you're looking to do this maybe in a retirement account. Retirement accounts are cash account only accounts. Then the alternative to shorting the stock would be to buy put options. And I would go pretty far out in time. In fact, I'm talking about possibly going with like a 2025 LEAP. So that's the option that expires on the third Friday of January in 2025. And that would be January 17th. And I would go pretty deep in the money. I'm probably thinking about something in the maybe this $40 range. And so instead of spending, putting yourself on the line for covering a $57 stock, which is where it's trading right now, $57.50, you'd be putting on your line for a debit of around $18.50. So not only do you get to turn your margin trade into a cash trade, something you can do in a cash account, but we're incorporating just the tiniest amount of leverage and getting something for much less expensive, right? $18.50 versus $57.50. So that's what I would be doing as soon as I get my signal. So I don't want to do it, like the famous line that says, don't shoot until you see the whites of their eyes. We're not going to pull the trigger on this shorting until we see that actual signal and follow through play out. But when we do, like you could see how my buddy's validator indicator gave us a signal at the beginning of February, and that played out so nicely, right? That made such a nice trade. And then, unless it really goes down below a level of support, like unless it really dips down to $52 or lower, instead of, buying back those put options or buying to close that shorted stock, another alternative would be to sell put premium. And so you're setting yourself up for one of our premium trades, the ones we talk about in my program all the time. You're setting yourself by creating this, what we call a covering position, to now create this into an income trade. So all to say, Citigroup, it's got my focus, and it should be something that you have on your radar as well.
Yeah, I'm definitely liking the setup here. And once again, the link to download AJ's free indicator, we did just throw that in the chat. The link is also in our scroll bar. A quick follow-up to this. Do potential rate decreases accelerate, right? Like historically, do banks and financial companies go against interest rate cuts, right? Like, is there a correlation with that?
Yeah, so interesting, especially with a big bank like Citigroup, right? Citigroup makes more money when interest rates are high, right? That's how, Citigroup can make that spread, right? When interest rates are higher, then that means they can charge higher interest rates for loaning out money with credit cards or with, mortgages. Citigroup actually has all sorts of products for lending money. They can raise that interest rate. And then they also, even though they have to raise interest rates on people who put their money in for like savings accounts and stuff with Citigroup, you'll notice that the spread gets larger. So higher interest rates are always good for banks because banks make more money that way. When you see really low interest rates, you'll see banks looking for alternative methods to make money. You'll start to see a lot of service charges. Like bank rates have been low for the last 10 to 15 years, right? Incredibly low. And we saw all this stuff about banks charging fees. Well, that's because they couldn't make money the traditional way off of the interest rate spread. Now, all of a sudden, banks can make money the more traditional way. You're seeing a lot less emphasis on them charging a bunch of fees. So if interest rates start to go down, I don't think it's going to affect them right away unless interest rates have to go back down to that zero number. And I don't foresee that happening unless, of course, the bottom falls out of the market, which it's always possible we're not coming in for a soft landing and that might happen. But as of right now, I see interest rates pulling back maybe to the 3%, 2% rate. And that would be a perfect rate. That would be a perfect middle ground for everybody if rates just kind of stayed in the next 10, 15 years in that 2 to 3.5% range. I mean, everybody would be happy. So I think that what we're seeing in the stock price right now with Citigroup is just the everyday running of the business.
Yeah, and I do think that if we do see those rate cuts, this looks like a nice position for the next couple of months if you're looking for a short opportunity. So that's AJ's pick of the week.
Yep.
Citigroup, ticker symbol Citi. All right, before we move into our speed round, I do want to say or AJ tell you that I did finally get a chance to watch the Dumb Money movie.
Oh, yeah.
On Netflix. It was phenomenal. So if anybody hasn't seen it, go check it out on Netflix. And the reason I bring that up is our first speed round name is one of the storylines in that movie. And with that, let's go ahead and run into it. Ken from Sacramento, California is interested in Robinhood, ticker symbol HOOD, which was that darling of the COVID era where everyone was jumping on their phone and starting to invest. So AJ, is there an opportunity? Do you see a way to make some money off of this?
Well, I think that Ken, I think what you're wondering is, should we be shorting Robinhood because Robinhood looks to be at an all-time high. So let's take a look. I do like to always go back a little bit, and 2 years is a really nice number to go back and see, where are highs, where are lows. If you stay focused on like the most recent 3 to 6 months, you might be missing some good history. So we call this fractal patterns. And generally we'll look at, like, we always keep our eyes on a 6-month daily chart. That's what I just pulled up. But then it never hurts to go back and look at a 2-year weekly chart and even a 10-year monthly chart. Now, Robinhood hasn't been around for 10 years. So when I pull up that chart, we go back to like the beginning of its existence. And so you could see when they first came on the game, they were actually, quite popular. They got a lot of investment dollars. Their stock was trading as high at one point, $85, but for the most part, kind of hanging around the $40 to $50 range. Then they really, like, if you did watch that movie, you know that they lost a lot of their target demographic when they, succumbed to some of the pressures of Wall Street and the big traders out there who, it was just interesting. So we'll come back to our 6-month chart. You're right. I am seeing that as we're pushing the $17 range, we're at highs that we haven't seen in a while. And usually that means that some distribution could happen. Some sell-off can happen. I would wait for that signal, Ken. I see that I had one of my fast MACD signals, but I haven't gotten follow through. You'll also notice my buddy who created this reversal validated, he's put in a little something. He's looking for follow through a little bit differently than I talk about. He's looking for candlestick. He's looking for one of the traditional like key reversal up bar patterns. And so you can see when he gets his little signal, let me zoom in so you can see exactly. When he gets his little signal, if he's got follow through, the next bar gets a little arrow like this. So he got follow through on a buy signal back on January 22nd. I got my signal on January 23rd, but didn't get follow through until January 29th. So you can kind of see he was earlier to the game, but then the symbol kind of stalled. And I then got another signal on February 6th, and that's when we finally took off, especially through the earnings season. You can also see he's gotten some signals for selling, but then didn't get the follow through on that. He's had a couple of those signals. I'm seeing a signal with no follow through for shorting this. Without the follow through, you don't want to take it. So again, I go back to that famous line, don't shoot until you see the whites of their eyes. But yeah, there's a few things we can do here. We could short the symbol. We could buy put options. And again, I like doing those put options that are farther out in time. And I would probably do the same thing I was talking about with Citigroup. I'd go out to the January 2025. I'd use a put option. I think I was on the Citigroup one. I might have been looking at some call options. I should have been looking over here in the put option area. The put option I'm interested in is maybe this $30 put. So $14.30. It's about the same price as the stock itself, but I would be able to do that cash trade instead of that margin trade. So I would look at this January $30 put as a substitute for buying for shorting the stock. And now it makes me want to go back, Sip, and look at that Citigroup because I think I was looking on the wrong side of the option chain. But those would be my thoughts around Robinhood and what I would do if and when I get that sell signal.
Yeah, I'm actually surprised to see this near 17, just because when we've reviewed this in the past, it's always been down there in that like $7 range. So it seems as if they're doing well over at Robinhood. I mean, I've always been a fan of the product, so I think the stock price is finally starting to catch up a little bit. So,
but if the market breaks, Sip, like we look at the S&P as we get, and again, I'm thinking next week we might see some friction. I think Robinhood would also. So, looking for that signal and being ready to act on it can heads up. Can I go back and look at Citigroup and just revisit that option chain? I don't want to give people bad information. So I was talking about Citigroup and I was talking about shorting it at 57.50. I would rather you use the Citigroup January leap, and I'm thinking we use the $70 put. That $70 put is trading at $13.85. You could also use the $75 put. Both of them have some liquidity on it shown by the bid-ask spread. So either one of those, 70 or 75, the 75 has a little bit more intrinsic value than the 70, but I think that the 70 would work for us. And again, that thing's trading at $13.75. That's even a better deal than what I was talking about when I was like smoking grass over here, looking at the leap on the call. I wasn't actually smoking grass, but I don't know why my brain was on the call side. I should have been looking at the deep in the money, far out in time put option.
Hey, it's all good. It's been rectified. The viewers are in the know. Move on to our next name in the speed round. It seems as if the theme of today's show is finance and electric vehicles. This is Brent in Huntsville, Alabama, interested in your take on Tesla.
Yeah. All right. So, okay. We're going to do the same thing. Look at the 2-year chart and look at the 10-year chart.
The 10-year chart. Woo. Look at that.
Yeah, we're definitely off of our 10-year highs. We're about half of the value. Tesla seems to have hit their highest point about 2 years ago, and now they're about halfway. They're at half that value. Let's come back to our 6-month chart. So it looks like we're at lows, aren't we? So do you want, who is this? This is Brent in Huntsville. Oh, Huntsville. I have been to Huntsville. Huntsville is this little mecca of, because of NASA and because of the rockets and all that stuff. There's a whole bunch of nerds that live in Huntsville. And so it's kind of like a cool place to be. I love hanging around with smart people like people that are in Huntsville. So very cool, Brent. I'm excited for you. Okay, for being around those people. I'm maybe even a little bit jealous. I'm wondering if we have an opportunity to buy. So are you looking to get some of this Tesla stock under your belt? Because if that's the case, I would go back to my naked put strategy, otherwise known as cash secured puts. Let's look at this. How much are you willing to pay for a share of Tesla? It's trading right now at 175. If you're willing to pay 170, you could put in one of these orders. This order would be good until March 15th, and you would get $2, roughly $2.30 a share just for putting in the order. And whether or not it fills or not, whether or not you get to buy the stock at 170, you're going to get to keep that 230. So if you want to go less, say you are only willing to pay $165 a share, you get $1.13. So I could see doing that if you think that now is the time to be buying some Tesla, that it's at a low and you want to add it to your portfolio for the medium to long duration. And you don't have to wait for this bottom signal. I can see my buddy's indicator is giving us a bottom signal, but he didn't get follow through like he did on January 30th. And after getting follow through, I can see how it played through. So his indicator worked for a nice little trade here. So yeah, and if you do pick up some Tesla stock, you can start writing covered calls against it, turn it into an income generator. So yeah, I can see that might be a viable strategy. One other thing, Sip, that I have to just throw out there: if you use my strategy of naked puts to buy stock, remember you have to do it in lots of 100. So when you go ahead and do this 165, you're not going to get $1.15. You're going to get $115. And at the same time, if the order goes through, you're not going to buy one share at $165. You're going to buy 100 shares at $16,500. So be sure you're ready for doing this in multiples of 100.
Yeah, Tesla's one of those that you got to have the portfolio to get involved. On the other hand, we did discuss Rivian, which is about $10. So if you want to have an electric play, you do have some options in the options comparable to whatever your portfolio is. So
Yeah.
Tesla's one that we don't really look too often, primarily because it is more on the expensive side, but it has been a darling over the years, and I think
you could do a vertical spread strategy too. I would wait to place the vertical spread strategy until you do get a bottom signal with follow through. And also, just again, disclaimer: if you do any vertical spreads, make sure you're only investing as much as you're willing to lose, because vertical spreads can turn on you in a dime. They can go from making a few percentage points of gains to being a complete loss of your total investment. So if you're only willing to lose 2% of your portfolio, only buy 2% of your portfolio in vertical spreads. Don't go buying 10% of your portfolio in those vertical spreads, because you could lose that whole 10%.
Great advice. Thank you for the heads up, Brent. Moving on to our third and final name in the speed round. This is Gene in Boston, Massachusetts, interested in Ocean Biomedical, ticker symbol OCEA.
Oh, well, I did a little bit of research, and what's this question mark mean? Let's find out. Earnings aftermarket at Central Standard Time on March 14th. So next Thursday, there'll be something having to do with Ocean. Ocean was trading down here as a penny stock, and now it's back up. People are focusing on it. You can see my buddy's indicator keeps saying, hey, this is overbought, but he never gets his follow through. My indicator hasn't popped yet on any of these yet to say that it's overbought. But the key here is this is a company that is focusing on things like cancer. And I don't know if anybody caught the State of the Union address last night. It was quite animated from our elderly president. But one of the things he did that everybody stood up and clapped about was talk about, kicking cancer's ass, which is totally cool. And this is one of those companies that is working on some of those long-term solutions to cancer. I think this is actually the company that likes to look at horseshoe crabs, because horseshoe crabs have something. I've just read this in some of my science mags. They've got something in their blood that is a natural cancer preventative thing or something like that. And so we're trying to figure that out with horseshoe crabs. One of the oldest species, horseshoe crabs were on Earth since the beginning of times, pretty much. So yeah. I also know that it's not just the rhetoric from like our president's State of the Union speech, but also the government has injected like 10, maybe not 10, maybe more like $8.5 billion into these small companies looking for cancer solutions. And I think that was the spur. I think this company probably got a heck ton of government investment, which is, that's ramping up their stock price. So I'm not sure, now that all the viewers know about this company, Gene, I'm not sure what you're thinking here. Are you thinking that this raise up is short-lived, or are you looking to get in on the ground floor? This is a very speculative play, folks. But again, here's some different thoughts. If you believe in this company and you want to pick up some of the stock, I'm going to keep harping today on never do just a limit buy order. Instead, sell cash secured, otherwise known as naked puts. So if I look here, I get off my vertical spread setting and instead look at stocks. This thing is trading at about $5.19. If I'm willing to pay $5 a share, so if I buy 100 shares, I'd be willing to pay $500 to get 100 shares of stock. I could do that right now, and I would walk away with 92, almost 93 cents a share. So that would be $93. That's actually phenomenal to be able to get that much premium. If the stock trade goes through at $500, you'd only be paying something like $407 for these $500 worth of stock. So you automatically get almost a 10% discount. And if this trade doesn't go through at $5, you get to keep that almost $100. So for every contract of options, I think that's actually viable if you want to perhaps wind up with some of this stock. And if you do wind up with that stock, you can do the whole covered call protective put thing and basically create a trade zone that if it goes above, you get exercise. If it goes below, your protective put kicks in. I could see how this could be kind of a fun stock to trade. I wouldn't make this one of my income producers, but I could see if you keep, like, for instance, 10% of your portfolio to one side for more speculative trades, I could see starting off with some cash secured puts and, trying to get a hold of some of this stock and collecting that huge premium in the meantime. And then at the same time, once you get that stock, then doing covered calls and protective puts. So you could keep going on this guy for a while until it either deflates or keeps going higher.
Yeah, I imagine that this is a similar structure of a lot of these biomedical names where it's just
Mhm.
like kind of just sitting there until some sort of revelation or FDA
Mhm.
approval, and then you get the pop. So,
Yep.
thank you for bringing this one to our attention, Gene. That wraps up our speed round. And it looks like we're getting close here to the end of the show. AJ, first week in March, heading into the weekend, heading into next week. Are we still keeping an eye on something breaking in the future? Is that kind of the consensus that you're gathering?
Yeah, and I don't know, we've said that that was going to happen for like the last months, and we keep adjusting what we're seeing based on the pattern that unfolds. I'm not putting that to one side. Maybe the pattern unfolds again, but we can't every week, especially like you mentioned in the beginning of the show, every week we see that investors come back from the weekend a little bit sour, and then something happens in the middle of the week that gives them some optimism going into Friday. And so we'll see if that keeps playing out, but I'm not going to be surprised if one of these weeks, especially these next 2 weeks coming up, if we have that negative sentiment from the weekend and then that news midweek doesn't come. And so the negative sentiment takes us a little bit lower. I'm not going to be surprised. I'm hedging with my VIX trade. I've got protective options on all my long positions. I've got my short positions ready to just profit. I'm ready to, for instance, if I've got put premium sold, I'm ready to buy to close those sold puts to allow the short positions to profit. So I'm ready for some sort of pullback, but I'm also, you know, totally adjusted for making money on the continued optimism. And so that's what I can say to you guys. Think about, if you're not using options, look into using options, because options can profit on just more than up moves, right? We can have these adjustment strategies automatically loaded into our trading platforms that'll passively handle any negative news, and it's all because of options. So that's why I've always been attracted to equity options, options on ETFs, indexes, and of course stocks. And I think you guys, if you're not into it, if you're just watching our show for entertainment purposes, you should make it more of a doing thing and not just a watching and observing thing.
Yeah, and if you're watching for the first time, scroll on over to that subscribe button, hit that like, hit that follow, hit that share, hit that retweet button. Help us get a little bit more exposure. I know that we've referenced the charts for the majority of the show, and you're probably seeing some of those indicators. If you want access, we've got it free for you. So head on over to the link that's in the chat, that's in the scroll bar. Sign up. You'll get access to that wonderful indicator along with a handful of other tools. It sounds like AJ and the science team and the devs are actively working on making that better and enhancing it.
True.
So that's exciting. And I know you and I offline have talked about some software stuff. So yeah, get in tune with the program, follow us, sign up, keep, stay in the loop on any of the updates that we have. Do we have any next week? Do we have any major economic news that we need to be keeping an eye on? Is CPI on the horizon?
No, we had CPI last week. I think this upcoming week, if I'm not mistaken, SIP is our boring week. But let me just take a look at what's on the calendar for next week. Come over here. Um, yeah, you're right. You're right. I was thinking PCE. We just had PCE, but CPI is next week. So is PPI. So all the other inflation, retail sales is going to be next week. Usually we have industrial production. So yeah, we've got some economic news next week. I'm not sure. We'll see if it upsets the apple cart, but so far everything seems to be just coming in where the Fed said they would.
Yeah, and you and the team at Trading Trainer are putting on your positions.
Mhm.
So as always, everyone, we appreciate you guys tuning in. If you have any questions at any moment, feel free to leave it in the comments. Send the team a DM, and someone will get back to you as soon as they can. Otherwise, if you're sitting on the sidelines waiting to get into the options market, like we mentioned earlier, it's a great time to be doing it. It's a fantastic time in the market to be an options trader, and we've got the tools here to help guide you. So if you haven't checked out the webinar, head on over there and sign up. Otherwise, AJ, I think that's all we got for the folks today.
I'll see you guys next week.
All right, guys, take care.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content